Hello from the Dukascopy TV studio in Geneva. We're talking about insurance for top executives and how to implement it with Mr. Patrick Starke. He is CEO of Starke & Company from Basel. Welcome to the studio, Mr. Starke.
Thank you very much.
So you just laid out how there is an increased number of D&O claims. This has to do with a rising pressure and also competitions. What are other reasons?
There's several other reasons, to be honest. One very typical case which comes to my mind was the case of the Deutsche Bank, for example. It turned up in 2002 and is still in the media today. The actual problem was a very clumsy statement of the ex-CEO of the Deutsche Bank, who doubted in this statement the financial stability of a corporation. It was actually the media corporation of Leo Kirch. And this statement raised speculation then in the financial community and led to the collapse of this corporation. And so we think managers should really draw attention to the communication in front of the media and be advised to seek support of professional communicators. So it is the best way to avoid problems here. Another thing is that especially nowadays in the times of the social media, managers and especially exposed people are using these techniques and communication on Twitter, Facebook and others can lead to really problematic developments after they published this and it can end up with using this material against such persons or companies.
So which other sources and reasons for an increased D&O liability do you see?
C-suite members and board members they have several problem zones which could be harmful for them, especially, for example, if they handle divestments or investments along mergers and acquisition strategy. These are times which are quite risky because some buyers may use these to make good for the buying price, for example. Other tricky situations are insolvencies. Then mostly official liquidators are mandated to run off such a company. And the problem there is that managers are put off the company and can no longer actively handle the situation themselves. Instead, often they find themselves exposed to claims from such liquidators, and therefore it's really quite a dangerous situation for them. Some other issues are non-paid insurance premiums, social insurance premiums, or taxes. We find often that tax authorities or social insurance carriers lodge claims against managers in case that these expenses were not duly paid.
Mm-hmm. So to what extent should enterprises and their managers be exposed to risk?
Well, the problem is that they are exposed totally, but of course not without protection. Nowadays, many insurance companies offer directors and officers liability insurances. The problem there is that, like always, the devil is in the details.
So what would you advise then to companies if they want to organize for an optimized insurance for their managers?
The biggest problem is that among these insurances there's huge differences, mainly in the wordings, the broadness of the coverage. Therefore, in most cases it is for insured companies not possible to find those pitfalls in the small print. Therefore, we would really advise to seek support of qualified insurance consultants before taking out such insurance. The target should be to have really designed tailor-made coverage for such companies, and it should really aim to avoid any negative surprises in the end. This cover should address to the most specific needs of such enterprises, and the outcome could otherwise be that the claim is rejected and insurance companies can then use exclusions in order to avoid claims payments.
Mm-hmm. So just taking risk management from the company into the perspective as well, what role should an optimized D&O insurance play in this risk management, and what are steps and actions that have to be taken?
Yeah, if we view apart from insurance the risk management aspect, then it is very important that all business risks are included in the risk management process, not only insurable or operational risks, because that is often the case. And one should also pay attention that in many enterprises, risk management software comes into play, and it could create a pseudo-safety if, for example, these risks are not included. If too much reliance on risk management software is taken without having implemented a proper risk management process all over an organization, then of course the outcome could create a pseudo-safety impression, and it could also lead for board members or C-suite to a fatal liability trap.
Thank you very much, Mr. Patrick Starke, for being here and sharing this information with us. And looking forward to see you in the third part of the interview regarding D&O liability.
My pleasure.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.